Hi guys, thanks for tuning in to another episode of Nuggets News. Well, it's been a massive week. This has probably been one of the favorite top episodes I've ever put together in terms of how all the macro and crypto news is just flowing and building to something that I think is going to be a historical event. So we're going to run you through all of that, give you my thoughts. We do welcome a few hundred new subscribers to the channel again this week. Please check out that NFT monthly update we'll be doing from now on. I'm pleased to announce that Maddie has also joined the Nuggets News family, so he'll be doing that regularly on the channel for all of you. And for members, he's already doing those daily 2-minute snapshots and answering your questions. We're also going to work on maybe a weekly write-up, but a monthly fundamentals report on top of all the research that we're doing for you as well. Now, I know everyone's got so many questions about DeFi and yield farming, so that super tutorial I did over an hour long, and it's all time-stamped. It covers probably the most popular 50 projects out there, and as new ones pop up, I'll continue to cover them for you as well. Now, I just want to give out a huge thank you. So obviously our members area has grown substantially. We're nearly at the 4,000 mark now. We're pumping out these member-only reports. I know that this is just a stepping stone for you guys to further your own research, but they have been tremendously successful at giving you, I guess, the early heads up on some of the most innovative and exciting projects. And yes, that often has led to appreciation in price, but that's not what it's all about. So look, now we have changed the format of those, and I'll explain how that all works in just a second because there's been a bit of confusion. But to get a present from the guys halfway around the world in Slovenia was amazing. So I'm not sure if you can see that in focus or not, but handmade wooden ink pens from Ziga and Gregor. I can't thank you guys enough. That's so awesome to get presents like that from our members, and I'm glad to hear you doing well and enjoying it. In terms of the community, none of this is possible without you guys. To get on Real Vision was one of my dreams I got to fulfill last week. Raul, obviously a legend who I look up to and I've learned so much about macro from. So for him and I to get to bang our heads together and talk about crypto was just one of the best experiences I've ever had. And they're looking forward to doing a regular segment there, which is just, it's just so great. And they've also launched the crypto division of Real Vision, pardon the pun, but Ash and I are also planning on doing a monthly regular segment there. So this was a sort of introduction to Ethereum. So for members, there is a link in the group for you guys to watch that one. For the crypto interview, I'll check with Ash. I'm sure he'll let me share that with you guys as well. If not, they've got that $1 trial anyway. So, hop over there and have a look at everything that they are doing. I'll show you the new format of crypto reports once we get into the crypto news. But to start off with, let's dive into the local news, where the culture of regulator faces pressures from our Prime Minister. So obviously there's been a lot of wrongdoing by the banks and the corporates, and the Hayne Commission showed all of that. But I think there's also a bit of a spotlight now on regulators saying, how can this continue to be so bad, and banks or whoever it is get a slap on the wrist, and then these things keep happening. So I think we need to change the culture of the regulators as well, and there's a lot of red tape. So I think there's going to be all sorts of shake-ups if we're going to get our economy chugging and competitive in the coming years compared to a lot of these other countries. Now, look, this is a good thing, I guess, if you are in the market, but sure enough, I'm sure all of you that are tradies and familiar with what's going on, you've heard that all these first homeowner and builder schemes have just meant that the tradies and the banks know that they can put up the price or lend you a bit more because you're going to get a little bit more. So that water always finds its level. I'm not sure why we're so just fixated on building more houses and pushing up the price, but sure enough, another 10,000 places. If I was a betting man, I'd say they're probably going to extend and probably increase the first home builder side of things as well. We've got the individual state grants. So if you're not in Australia and you weren't aware, we are obsessed with housing. So some good news that we are splashing out in different sectors. And in the crypto segment, I'm going to talk about those hundreds of billions of dollars that have been pledged towards tech. So obviously that's a great thing, and some of those dollars are just for blockchain. But this $1 billion splash, it's wage subsidies, it's all well and good, 100,000 more apprentices. Now, I know that there's probably a shortage of builders and labourers at the moment, but really, we're still pulling forward demand from people that were already going to build at some stage. And would we rather be trying to train up 100,000, scientists, medical researchers, people in cutting edge technology? It's great, and apprentices are an important part of our economy. But once we bring forward all that supply, we're going to go through that, that trough again. And what are these people going to do then? And we haven't updated our economy. So once again, we are focused on building houses rather than other things. The banks have come out and they're talking about the loan deferrals declining. That's a step in the right direction. Martin and I will go into far more detail this Friday in our monthly economy and housing update. So I won't talk about that too much just there. Over in Hong Kong, they were one of the, leading property markets in the world. Commercial real estate tycoons are taking a big hit, 34% markdowns. These sort of things are possible, even though everyone thinks that, it'll never happen here. Over in China, manufacturing has actually ticked up, if you do believe their numbers there. In terms of other areas of their economy, we know that just last week there was a huge liquidity crisis for one of their lenders and developers. We've got so many zombie companies over there. Geopolitics are playing out. The Belt and Road Initiative is continuing to, be that light at the end of the tunnel for the Chinese economy, and similar things that we're seeing in different parts of the world. But at the moment, China have got a huge demand for rare earth metals, and Trump's trying to, combat the dominance that they've got there. Maybe that's good for Australia and a few of our rare earth miners. But I think the biggest story here is Russia and China, these other markets that are going to begin to trade with each other. And they've probably got the resources. So I always talk about the book on my shelf there by Marin Katusa called The Colder War. And he talks about how Russia and Putin, and really the concept of resource-rich nations, they are sitting on the true stockpiles of wealth. And everything I talk about in tonight's episode or previous episodes, when I talk about how the financial economy and the real economy and real world assets have got out of whack, these countries are sitting on the stockpiles of the real assets. So yes, the US is sitting on all this paper wealth and financial derivatives that are worth a fortune. But at the end of the day, would you rather have those or, food, natural gas, oil, the commodities and the countries that make things? And I think that's where the big pivot is going to be. And Nord Stream 2 nearing completion, that's going to integrate Russia into Europe more. So once again, it's just the geopolitical, chessboard that we find ourselves in at the moment. Now, the big news this week, and probably one of the biggest pieces of news we'll ever see in our lifetimes when we look back on it in such a crucial election, was Trump announcing that he's tested positive for COVID, as well as Melania. So just a few hours ago was the most recent update. I might refresh that there just to see if we've got anything new. But the video, he looked pretty well. I'm not sure. There's going to be all sorts of theories. So as always, there's no need for me to throw my hat in and talk about what I think's going on. But there are going to be people that say that this is all a political stunt. He's got people talking about him. There's people that are worried that the worst could happen because of his age. So look, we are going to find out in the next week or so, just like we did with Boris Johnson, whether the condition deteriorates or he's going to be fine. And the markets are going to be absolutely hanging on every tweet. And who would have thought that that's the case even a couple of years ago? There's no love lost between these two at the moment. And we've had one of the Chinese state media come out and say, basically, this is karma for what you've been saying before. So I won't comment on that other than to report the news. So don't shoot the messenger in the comments, guys. But there's a lot of tension there still, particularly when we get to some more of the tech stock news. Now, millennials, they're talking about being even less likely to have kids now because of COVID. Love it or hate it, guys. It's sentiment that drives markets, and it's sentiment that make people do anything, before they make a decision in their lives. So I know population and birth rates already on the decline in Australia. We've got the double hit because we're so reliant on immigration, and a lot of countries in similar boats. So it's another thing that's in favor of the developing nations that have got really fast growing populations compared to us. But in all these Western countries, it's just another, I guess, headwind and thing that people maybe didn't plan for as we kept borrowing from the future and going further into debt. No one ever stopped to think, well, what happens when we slow down and population isn't growing like it used to? All right, so New York's had another pretty bad day here, 1,500 cases. Look, a lot of more testing's going on. That's not really the number we should be focused on. As I've said in recent weeks, I've changed my view a little bit now that we've got more evidence that there's plenty of countries that don't have these disastrous death rates. And so they're the conversations we need to be having. And when we look at these stats, sorry, this slide was meant to be after the birth death rate. So in Japan, their equity markets have finally got back to all-time highs. And a lot of people are looking at the US or whatever country they're in. Argentina's stock market is also at record highs, but this is a side effect of all the money printing, okay? It's not the fact that these markets are the best that they've ever been, and stocks deserve to be that high if you're using inflation-adjusted measures there. So when we talk about turning Japanese, whether it is related to the COVID cases or technology that's deflationary or demographics or whatever it is, that interview I did with Steve Keen nearly 2 years ago now called Turning Japanese, and what the central banks are going to follow that exact plan Japan have followed, it's painful watching this play out in slow motion and knowing that that's exactly where we're going. Now, interesting here, a lot of controversy around Bill Gates at the moment, but interesting that he published this in the Nikkei Asia. So this is one of his publications that he contributes to. But why is he putting it here? Japanese stocks making record highs. We know that he's obviously looking to profit or have a heavy hand in the COVID and the vaccine and whatnot. And a lot of people aren't happy about this. And one thing I've always, stood up for or said that I will draw the line at is if we go down this path where we start to find out, COVID was affected these people worse that had, this genetic predisposition or had this underlying medical condition. But the raw numbers are showing us that there's a reason that it's not as bad for everyone as we first thought. So when we start to see that in Australia, there's only, 10 new cases, I believe, in a few months' time, we're going to say there's no reason that we should have had everyone still in lockdown, okay? And so when we hear things like this, that everyone is going to be chipped, these are the tinfoil conspiracies that were floating around 10 or 20 years ago, and people said you were nuts. And once again, it is just another thing that has come true. And the excuse here is, well, this is going to be constantly basically testing your blood or your genetics and looking for COVID and making sure you either haven't got it or you've got the antibodies to it, as well as measuring all other biodata. But it is a scary reality we face where this could possibly be compulsory, and that is certainly not a world that I want to live in. But I'm sure I'm going to have plenty of comments on that down below. So the Netflix Social Dilemma, it is a fantastic watch and a real eye-opener for a lot of people. But as the title says here, it is a degree of deflection because the real area of concern is, that government and sovereign control. So at the moment, they're kind of pointing the blame a little bit more towards the big tech stocks. And don't get me wrong, they have done a lot wrong over the years. But ultimately, if we end up with these sort of things happening, it's not only the private companies, there's also people, elected officials that have to be held to account. All right, so over to the US. Where are the jobs? We've seen a lot bounce back in those areas that were the worst hit, hospitality and retail. Obviously, government is one that you probably wouldn't expect to cut that many jobs because they've got the printing press. And when we look at US equity markets, they've reached an extreme now in terms of, let's call this 3 standard deviations, outperforming the rest of the world's equity markets there. And as always, water will find its level, will reach an equilibrium, things mean revert, whether it happens tomorrow or in a year or two. These things don't last. Okay, look at the .com. Look back here in the Nifties. When there's this much money to be made and it's this easy, too much money gets allocated to a resource or to a stock market, and then there are better opportunities and less loved stocks elsewhere, and they become the better investment. But that all takes time to play out. So sure enough, we are seeing small firms going bust while a lot of these other big ones stay afloat, whether that's the cash-heavy stocks or these junk company zombies that are just issuing more debt. But the latest Heroes Act is $2.2 trillion. All the usual spiel here from the House Democrats. But I don't think, and again, I'm not an expert here, but from what I've heard, it doesn't sound like this is going to get through now before the election. I'm not sure if Trump can stamp something last minute and to the degree and what he can get through versus what the two parties were, I guess, trying to debate and come to a agreement, but they couldn't get there. So I don't think this is going to get through from what I've read. But if you think otherwise, or you're in the US, you've got your finger on the pulse here, let me know your comments down below. Unfortunately, this is going to mean that people go hungry, homeless, and it's those real people that politicians often forget about. So look, what's behind the Fed's project to send direct money to people? We've spoken about this at length in all our episodes about digital currencies, the new ledger, the new app. They want to trace everything you're doing. It's a direct stimulus to your bank account that bypasses the retail banking system as reserves, which need to be loaned into existence. But this can obviously cause inflation. And the Fed have started to talk about how they're going to welcome inflation and they're going to let it run hotter than previously. But we are already at these dangerous, debt to GDP levels compared to the last cycle. We never really let it unwind. And that's what worries people like Steve Keen, and more economists are kind of having to, I guess, change their opinion without admitting so because their models just aren't working. So there's a lot of uncertainty at the moment. People would like a better commitment from the Fed, who haven't been buying a lot of assets lately. People want the government to come to that resolution and agreement and just roll out that plan, whether it's 1.5 or 2.2 trillion dollars. It's splitting hair, really, at this point. And just look at this, the amount of debt that we need to use to maintain our standard of living. This is what happens when you fall into the trap of compound interest. Just like when an individual gets behind on their credit card, this curve starts to go parabolic. And we are now at that point in terms of the rate of growth of that US debt and federal receipts versus expenditures. Just look at how wide that gap is. This is where people are starting to say, hey, the US dollar, it's going to lose its strength. And I'm going to talk about whether or not what side of the boat I'm on when we wrap up this episode. But there's been some fantastic articles and just so much coverage about this recently. All right, so 1 million people from New Jersey food insecure by the end of the year. These are those real statistics, unfortunately, that so many people just bury their head in the sand about. In Australia, we've heard the stats about how people have drawn down their savings and their retirement accounts. It's the same situation in America. They're burning through these savings at a time when the rich are getting richer. And think about the alternative. The alternative is for the government just to keep them on some form of stimulus. And it's better than having to pay twice as much, 3 times as much when they retire and don't have any money. And sure enough, we're already in that situation to some degree where these low interest rates are just really killing those retirees. So Americans are running on fumes. This is the actual hard numbers, personal income from all sources. We had that big burst from all the stimulus and that's dropped off. This is the harsh reality of that extra $600 a week ending for a lot of people there. Personal income from wages and salaries, it's bounced back. We're waiting to see if that can trend higher and reach those old levels. Credit card balances, it is good that they have been paid down to some degree. Consumer spending bounced back a little bit. But we still have to wait and see whether or not these are just trends or a bounce. In terms of property, San Francisco rents plunging. Manhattan, 10,000 unsold apartments. Now, yes, that's a fairly big number, but keep in mind in Australia, the estimates are around 100,000 in terms of the oversupply in Melbourne and Sydney and more under construction. So when we look at the earnings forecasts and the different sectors that are being hit the hardest here, look, energy is the big loser. I mentioned before that, yes, the US markets are more attractive compared to elsewhere around the world, but the facts are now saying that less money, less cash has been returned to shareholders. Now, it obviously drops off a lot if we take out the metals and mining, and that's because some of the gold miners have got great cash flow at the moment, and they are paying out good dividends, and that is a bull case for all those stocks. But a lot of these other companies are paying less cash to shareholders, either from reducing the dividend, or a lot of them, remember, are buying back these shares so that they have to give out a lower total sum of cash, and the business gets to keep more. So remember, borrow money for free, pay out less, you're still winning effectively. Bond issuance smashes records for the 6th time in 7 months. This is all that junk debt that the companies are saying, hey, if you want to buy this crap off me, I'm happy to keep selling it to you. And it's getting squashed in these different ETFs and collateralized loan obligations. So who's on the hook? Once again, it's taxpayers when these individual companies or government funded programs go belly up and banks don't want to refinance them. It's either, taxpayer or beg the government, beg the Fed to come and bail you out. And we can see that the energy stocks, they've had a bad year. This is talking about the last time it was this bad was back in 82. This is where that cycle that I'm talking about, that this could well be that generational buying opportunity. And it doesn't mean it's right now. We could have a capitulation that drops another 15, 20, 30%. Who knows? But by historical means, I think that there comes a point where people want real things. You can only make real goods and services from real things. We can't just keep growing financial markets. Apologies if you can hear Louis crying in the background, guys. I'm hoping that that's not too bad. This mic is pretty good at cutting out that background noise, but it is bedtime and it's daylight savings in our house. But I will push on. So what does the Fed see heading at the big banks? And the Fed have actually stepped up to extend the blocking of the certain share buybacks and slapping dividend caps on people and basically saying to these companies, you need to build up those reserves for loan losses and defaults because they are coming. And, we see it in the statistics. It's absolutely no surprise there for those banks. And it was a dangerous situation they were in before. And that's what just does my head in when we think about what is happening in Australia, that the Royal Commission basically showed there was systemic fraud and the lending was just absolutely chaotic. And yet in Australia, we've just told the banks to basically cut out those responsible lending laws and start lending again because it's better than letting the bubble pop. So airlines, how many of these situations and examples could I give you where they've got a bailout, they want more, and sure enough, they've spent $50 billion on share buybacks, but they're, crying poor, we need another few $1 billion. And it's these firms and these funds and these brokers that are getting all this junk debt, commercial mortgage-backed securities in this case, and packaging them in with the good stuff, exactly like the GFC, and rating these as the top tranche, AAA securities. And that is, I don't know how it's not illegal. And even the rating agencies, they stamp these. Again, they got called out in the financial crisis, but I don't think anyone went to jail there. So guess what's happening? It's only 10 years later and it's the same game. And who owns all these corporate bonds? Well, there's a big mix from the rest of the world and different funds, life insurance companies, pension funds. A little slice here is households, but the Fed are basically aware that they are the last backstop. If they don't bail everyone out, bail the world out, it's all going to default and it's bad for everyone. So sure enough, I think they're going to have to step up to the plate and run deficits, and we're talking tens of trillions of dollars in a couple of years' time. And at that point, maybe every country's doing it, but that is enormous numbers that probably puts a zero on Bitcoin and puts another zero on the gold price. All right, so the sensitivity of these different sectors to interest rates here. Look, financials are the big one. We know that negative interest rates have absolutely smashed the banks, and we're probably staying there forever. So I just don't think banks are a good investment. They're getting disrupted by tech. They're getting punished by these low interest rates. And they're just not really lending either. They've kind of battened down the hatches, and they're just not willing to lend and take the risk because they're getting better returns on speculating on financial and tech stocks. So just look at how much the Nasdaq has outperformed here. It's going to mean revert. We've got these huge positions that just absolutely flip-flop in a week from almost crazy longs to these record short positions. So Nasdaq net short for the first time since 2018. And if we keep pushing up high, that's going to create a short squeeze. And just remember that I've done videos on this whiteboard sessions and the like about all these ETFs and how they're packaged up, and even more dangerous are those double and triple leveraged or inverse products. And we've now got to the point where the number of ETFs is more than the number of New York Stock Exchange listed stocks. And so remember, ETFs can only be made up of stocks. And so I just really wonder how big of a house of cards this is. It's almost like the gold and silver situation where we're going to find out it's 100-to-1 ownership. And it's all well and good when people are piling in gradually to these ETFs and the price is going up. But when everyone runs for the exits and this ETF has to sell, and then this other ETF in this other country is made up of that ETF, and then that ETF's got to sell these products, and the underlying stock is a small oil company, and there's no liquidity on that small oil company, and you say, I've got to sell for whatever price I can get, and maybe you get 10 cents on the dollar, and that fund is trying to redeem, and that person thinks they've got 100 cents on the dollar. And this is where it just all, I think markets would close, freeze over. It's just stupidity, and I don't know how this is just continually allowed to happen. And you look back at the dot-com bubble and say, surely we would have learned from what's happening. Sure enough, there's 60 stocks that have risen at least 400%, their peaks. We've got blistering pace of IO market. So this is not quite the record here. It's on pace. Busiest month on September was the busiest month on record. There you go. So IPO values top 80 billion in 2020. So it has surpassed the dot-com high. We're starting to see these blank check funds again. So if you don't know what it is, it's basically saying, hey, I'll write you a blank check. Let's create an ETF or whatever it is, and just get me into these early private investments that I normally wouldn't be able to get into. Basically saying I've got too much money and I don't know where to put it, so just speculating. 20% of stocks are made by retail investors. Remember that we had that stat that 90% was algorithmic trading, and a lot of the rest of that was the investors and funds professionals, and now we've got retail investors dominating. 50% of people on Robinhood, it's their first time investing. 75% of all the options are 2-week options. Options markets extend out 2 years or longer. And those of you that have traded options know that the area you want to be playing around in is that sweet spot between 30 and 60 days. People speculating these 2 weeks, it's creating this gamma style trade, which is all about momentum, and it forces the market maker, the brokers to buy shares to offset the speculators, and it's basically forcing them to do things that are almost wrong because of what the retail investor is doing. And so they've actually got to buy shares and then buy more shares, and they've gone up so much that the retail investor has continued to be right, forcing these brokers to continue to buy a lot of shares, and it ends up with just this unsustainable position that's going to unwind. It works just as quickly in reverse, put it that way. There's going to be a lot of retail investors get margin calls and lose everything, even if they've been profitable every month for 6 months. SoFi, so this is a dividend that pays an ETF that pays a dividend every week, and it's called TGIF. So, thank God it's Friday. This is just nonsense that's happening. Insider selling, it's picked back up again. So the insiders are continuing to sell. We know that Senate are bringing in big tech once again to justify what they're doing. China themselves are preparing this big antitrust investigation into Google. All the EU regulations have changed. We've now got this uncertainty about the election, and the probabilities of winning. Is this just the other day, the most recent? This has got Biden jumping ahead. I thought it was a little bit more even than this. when we look at some of the crypto prediction markets. But anyway, there is a lot of uncertainty, and that gives investors reason to park in gold. Now, important to realize that a lot of that demand is normally from India and China, and that has dropped off. So you'd say that this has probably dropped by 50% from 400 to 200. Is it metric tons of gold here? So it's investors, retail investors, that have made up for that jewelry demand that's dropped off. This is clearly shown here in this graphic. So institutional futures, no real growth in the past 2 years. But when we see physically backed ETFs, and look, some people hate these products. That's fine. I'd probably recommend everyone start with physical metal and hold it yourself, or have it stored with someone you trust, like Ainsley Bullion or Perth Mint. But if these ETFs are physically backed, then that's okay. And we see it come through. So a lot of the retail investors that are going through the Robinhoods or the eToros, look, I don't really have a problem with people taking advantage of these kind of offers that they have. No fees and $100 Bitcoin giveaways. If you're sticking to the simple products and using physically gold-backed ETFs, which they do offer. And we're seeing that sharp demand, and the warehouses have to buy this gold, and it has to get audited. So look, I know some people are physical or nothing at all, but a lot of people do like to trade or be able to get in and out more quickly. And you've got the ETFs, and then you've got the gold-backed cryptos that trade 24/7. And I might even talk about in our members group how there could be a big trading opportunity at market open tomorrow, where you can trade gold before the gold market opens. And in the past, some of you that have been members for a while will know how that led to huge returns in just a minute or two because of the way those markets work and the arbitrage. All right, so another slap on the wrist. Well, hey, it was a little bit bigger this time. $1 billion fine for JPMorgan. The criminal trading ring, they've been spoofing, racketeering. No surprise to those of us that have been in the industry and thought that this was happening. But it's, once again, these traders, like this guy, he gets caught, he deletes his WhatsApp, then gives the phone to police. So they basically know that someone was insider trading, but because they're using these apps, deleting them, there's not much they can really do. And we look at the alternative in the crypto scene this week, where these guys are basically facing jail, and look at everything that's happened in the banking world and financial markets, Wall Street, corruption, money laundering in Australia, the Royal Commission. I won't even get into what the Aussie banks were doing overseas. And then we've got the FinCEN documents last week, $2 trillion. But the first reaction is to throw the crypto guys in jail because they were believed to be letting US customers use their exchange. You are going to see a lot of civil unrest if that kind of thing continues, put it that way. Now, one thing I just wanted to mention on top of gold and silver is smart people talking about diversifying in all other assets. And our market is almost used in that regard, just to diversify, and the super rich park money in there as almost a store of wealth, even though the art itself doesn't have that much intrinsic value. The paint that you buy and the fabric and the frame, that might only cost $100, and the painting sells for $1 million. It is almost an agreed upon thing. So when people say, well, what's fiat money backed by, or what's Bitcoin backed by, or what's art backed by, anything can have value if it's agreed upon by the participants in that market or that community. And so just like we're seeing a lot of digital art and digital collectibles, which I'll talk about in a second, there's no surprise that a lot of money is pouring into these sort of things in the traditional market as well. So once again, all the forecasters, the economists are saying things are going to get better next year. There was a great chart of the ECB forecasts and predictions and how it's turned negative, and they've literally been opposite of what's happened every year for 10 years. But anyway, here we see the one-way trip for American debt. You guys know the story that the gaps are widening, the outlays compared to what you're getting for the revenues, it is just not sustainable. It has reached the sort of the exponential part of the curve. The unfunded liabilities are just insane here. Some of the promises for things like healthcare, when the population is getting more unhealthy, it is sitting there in front of you, and you just see this $100 trillion bill getting closer and closer. And companies like MicroStrategy or investors like Paul Tudor Jones, it's no longer just the weirdos on the internet that are saying, well, you know what, maybe I should buy some gold, maybe I should buy some Bitcoin because that is digital and scarce. And they are going to have to print $100 trillion to pay off all their debts. So the train is coming towards us, and this is the biggest deficits in history for the US here. Yes, trade deficit, sorry, $82 billion there in September. All right, so despite all of this, we've still got those record bets on dollar going down. So a lot of people are going to get squeezed. And I've been talking about that bounce that I felt was coming in the US dollar, or the DXY, which is basically a basket that's heavily weighted against the euro. So it's more about what the euro is doing. And we've got the bounce this week. And interestingly enough, Christine Lagarde, the ECB, they have followed the Fed's footsteps and said that, well, they've hinted at the fact that they're probably going to go for the hold, we need to get inflation higher because we've been lagging. Now, remember, their inflation's been even lower than the US. So if the ECB start talking about this, maybe they're aiming for 4 or 5%, where the Fed have said maybe 3 or 4%. They're going to say there's no formula. But if we have negative interest rates in Europe, which aren't working, and then they're going to try and target 4% inflation, that's a real interest rates of negative 5%. That is going to see trillions of dollars go into gold and Bitcoin if the ECB go down that path. And once they go down that path, guess who follows? All the other sheep, all the central bankers that have no idea what they're doing now. Their models aren't working. They're flying blind. They're just going to do whatever the Fed does because they think that worked okay for the US. But the whole story here is that the US have got that privilege. And the Swiss National Bank, they spent $100 billion just defending the peg and putting that money into buying US tech stocks. The US have things very different, and it's going to end up very, very messy when other countries try to do the same thing. So despite all that huge debt, at the moment, there's no volatility priced in the US Treasury market. So people are very happy and saying, yeah, you know what, even if the US government do have to issue 10 trillion of bonds, Europe are probably going to have to issue proportionally more, or Australia or China, and interest rates are still at least positive in the US, so I'd rather buy their bond than buy the negative 1% bond in Europe. So that's the situation we're in at the moment, where the smartest money in the room isn't really pricing in any volatility at the moment. So we can see how well the ETFs have performed, the bond ETFs like TLT here. If we go back to the start of the year, it's gone from around 135 to 170. And this is a bond market that shouldn't really move that much. Raul and I dove into this in great detail, guys. So if you do want to watch this for members, there is a link in our group. So just search Real Vision. And another great interview this week was Brent Johnson and Marin Katusa. There's a link to that on Marin's website. Down below, we've got the links to his stuff. So a lot of smart people are talking about this, and it's the thing that is going to determine, I guess, what happens in the global economy. So it's important you understand it. Okay, I'm going to whip through all this crypto news. That super tutorial, as I mentioned before, that is all timestamps now, guys. And I did a deep dive on a lot of the MetaMask questions we get. Why is my transaction stuck? Why are gas prices high? How do I change the nonce to replace that transaction if I've done multiple that are all stuck? It's all in that tutorial, and I'll link that down below. Ticker TV, a little Aussie broadcaster. Every Thursday I'll be doing a little segment with them. So great to see a little bit of mainstream coverage and interest in crypto. Hopefully we can get some more everyday Joes down the rabbit hole. I've already mentioned the DeFi tutorial. Share that with your friends and family. But Aussie government. So this is the pledge out of the big pool of funds. I think it was 700 or 800 million Aussie dollars concentrating on digital and technology. Finally, we give it a bit of love in Australia. But there's been 7 or 8 Aussie million dollars pledged for blockchain, and they want supply chain, logistics, efficiency in, bookkeeping and that type of thing as well. So interesting to see what comes of that. The RBA have told the ASX to keep pushing on with getting your exchange on a blockchain, because we know we've seen technical glitches. Japan's the third largest market in the world, and they had a glitch that was out for hours and hours this week. Shenzhen stock chain, wow, I'm tongue-tied tonight. Shenzhen Stock Exchange is preparing to go blockchain as well. We've already seen other countries like Venezuela announce that they're going to try a decentralized stock blockchain rather than the centralized version. So I'm interested to see what comes of that, because, hey, the Petro, the stable coin that they ventured into, was a bit of a flop. So I'm not sure if this is actually going to end up being a decentralized stock exchange or not. Talk about using Ethereum anyway. The digital euro will protect the Eurozone from foreign issuers, says the ECB. So this is a little bit in relation to that concept of the euro dollar system and all the shadow banking of the US dollars that sit outside the US. It's kind of what the euro and the ECB are saying here, that if we have all this on a ledger, for the first time ever, we're actually going to have an idea of how many euros are outside Europe. And it's funny to think that there's trillions of dollars that they don't know about. US lawmakers passed a crypto bill. This is, I guess, a step in the right direction. It's been approved by the House of Representatives. I think the overall attitude's changed, and it's been fairly positive recently. So there's these articles coming out from the likes of Deutsche Bank about how the central bank digital currencies are going to challenge US dollar dominance. You know, we've been talking about that for years and years, but I'm more interested in the good cop, bad cop. So this week we saw the SEC finally win this lawsuit, $100 million against the Kick ICO. We saw them force SALT to refund all their ICO investors. The third one here was them basically promising that they're going to help protect investors. So they know that this is a fast-growing space, and they actually like digital assets like Bitcoin, but they're going to come down hard on the scams as well. And look, the huge news in the crypto world this week was the CFTC charging BitMEX with illegally operating a derivatives exchange. Now, there are so many, I think, exchanges that are playing with fire. So a lot of them that have listed US securities, a lot of them that allow US customers or almost encourage people to use a VPN to get around it. Some of them that are listing that, like, the US stocks and marketing them as almost like you're trading the product. So I think there's a lot of these exchanges that I won't name that are going to get a tap on the shoulder, that are set up in places that they think they're safe, but the US is going to act like the world police. Either way, we saw a huge outflow of Bitcoins from BitMEX. So here we have about 300,000. That's dropped all the way down to around 170 there. So big outflow of coins. But surprisingly, there's still a reasonable amount of investors that are still there. I would have honestly thought that there'd been more than that. You know, why would you even risk hanging around when there's that possibility that all the assets get frozen? Another interesting step here was Gemini adding shielded transactions or withdrawals. So fully regulated, the Winklevoss twins allowing privacy coins, which have been sort of delisted from a lot of places, and encouraging actually shielded transactions and privacy in a US exchange. Bit of a surprise. So I wouldn't be surprised if they've got a backflip on that at some stage. Bitfinex have launched tether-settled perpetual contracts on European equities, treading on some toes there maybe as well. We saw SEC chairman Jay Clayton is basically saying that he's open to these crypto or tokenized derivatives or ETFs of sorts, so tokenizing stocks. So a bit of a no-brainer there, but always good to hear that. We've got a new project that was interesting I read about this week, Persistent. So trying to bridge the gap between the institutional world and decentralized finance. A lot of these now are either end of the spectrum, but I think even when people like CZ are starting to admit that DeFi is going to eat their lunch, that's why they're making those aggressive moves for that space. This was my digital thick shake theory in action once again. 57 countries that can now use Binance as stablecoin rather than using the banks and all those different payment providers. The stablecoin supply has jumped to $20 billion. So this is just in one quarter, it was $8 billion. As I said to Raul, I think we are going to get to 100 billion by the end of next year. And this is really competing with global forex markets at that stage. Indian investors are flocking to DeFi once cryptos become legal there. KuCoin hack, the figure keeps growing, getting up towards 300 million. They think that they've identified the hackers now, so that could be some fantastic news there. But what this really highlighted was how many tokens are still pretty centralized. So Ocean Protocol did this fork, whereas something like Synthetics, the community came together and chose not to really prove that it is, decentralized or more unstoppable. And I think some of these projects that make these centralized decisions are almost putting a bit of a target on their back in some ways. So you just got to be so cautious there. And I think a lot of you from the feedback I saw were unaware that just because Ethereum is a decentralized protocol doesn't mean that the assets that you build on top of it and the teams that create the rules can't be the dictators. IOTA, some more updates this week. Their alpha version or pre-alpha of their smart contracts, which is fantastic. We saw XRP, a couple of interesting items here. So this airdrop of the Flare token, I think this is a centralized example here where they're choosing not to give the tokens to Jem McCaleb because he's been dumping. Someone like David Schwartz kind of puts his hand up and says, I want these as well so that I can dump them and sell them. So really interesting one here. I am looking forward to chatting with Sam about everything that has been happening in that ecosystem because the worry that I have is a little bit like EOS when all the sister chains started to launch. You're just basically printing more tokens for more ecosystems each time, and it's harder to create value for the underlying ecosystem once you start doing that. Ripple did win a patent themselves this week for Oracle-based smart contracts. We saw them partner up with Energy Web Foundation to start to try and tokenize those carbon trading bonds that we see a lot of projects interested in. And esports in Japan's paying some of their players in XRP. Oh, right. So the big news in the NFT space this week was our first monthly episode. We've been getting so many questions. So please make sure you're following Matty on all his socials. He's a legend. As I mentioned at the start of the episode, he's going to be doing daily posts in the group, bit of a weekly write-up or in-depth monthly research report on top of all our other crypto research. So it's great to have him, and I think everyone would agree that this is the fastest growing sector of crypto now. We push on. So this was a little bit of a surprise to me when I was mucking around this week on Nifty Inc. So this is a second layer solution on the XDAI sidechain. And you can basically create your own assets. And I was mucking around and I created basically just a Nuggets News scribble. And it sold for one. I've only made 10 of them and I gave 9 to some friends and gave 2 away to 2 of the community. And I put the last one up on OpenSea, which is the marketplace, to see how much it would sell for. And it sold for $400 when I woke up the next morning. So I made one that was a little bit more colorful and made it a little bit rarer. And I thought, maybe this is a one-off or someone's playing a joke or whatnot. So I'm going to give one to Louis. I'm probably going to put the other one in Decentralised when we build our virtual headquarters there for our meetups. And I put one up on OpenSea and it got like $800 within 25 minutes. And I'm thinking, this space is nuts. That's a little bit ridiculous. So I took it down. I'm not sure if I'm going to sell the other one. Maybe in future, but there's a lot of money flowing into these and people either love that or hate that. Red Fox, 2 announcements this week. So this one is up 35x since we did that interview with Benny about 6 or 7 weeks ago. Some very happy members I know. They launched their gaming website this week, but they also put out this video, which is an absolute cracker. So go over to their website, watch about what a venture builder is and what they actually do, because I think a lot of people still don't understand the multifaceted business approach that they are implementing. Atari, old school, they are coming back and they are jumping into the crypto gaming space with a bit of a premiere here. I think they're doing a raise on on Bitcoin.com as well, so keep an eye out for that one. We've got NBA getting involved. This is a partnership with the Samsung Galaxy Store as well, so tokenizing these top shots. Another little cool game there, getting involved with crypto. Social tokens, are they the next big thing? So a lot of crypto influencers are tokenizing themselves, and I think this is sort of bordering on the world of securities. If you're trying to say, hey, you're giving ownership or a right to future revenues of what you do to other people, but hey, that hasn't stopped a lot of people in the DeFi space tokenizing themselves. But a great piece by the guys over at Bankless this week. I've been trying to get Sean Adams on for ages, guys, so if you're a Bankless fan, stay at him. Tell him to come on Nuggets News. I'd love to collab with him and talk about this. And I kind of joked this week, it's funny that Max Kaiser has been calling Vitalik a scammer for launching Ethereum, but a lot of people don't realize that Max Kaiser launched Maxcoin and shielded it pretty hard in 2014 and 15. It was a bit of fun at the time, but maybe Max will do a backflip now that he's heard that social tokens are the next big thing coming back into fashion, because it didn't work at the time. So this is a bit of a sample here of our new reports. So previously the 5FA reports were 5 projects monthly, and they were 2 or 3 pages of research. So what we're going to do now is 1 project a week, and these are far more in depth. So as you can see here, 8 pages of goodness. Now this is Avagotchi, I guess a side project of Aave, which has been another successful project we covered that actually went up 100-fold from when Matt first started talking about it. I think that's Matt's favorite project, but this is in the gaming space. So yes, Maddie will be covering gaming projects and NFTs as well. But if there's a good project in the gaming space and we feel that it's worthy of the in-depth analysis, we'll still be covering it as well. So guys, let me know your feedback. Do you like this format? Do you understand that better now? Because a lot of people thought we're cutting it back to 1 project a month, and when we said that we're going to 1 a week, I think they're a lot more happy, because you're getting far more research than what you were before. So Eminence, a bit of a story here. Everyone loves Andre, the creator of Wi-Fi, the token that went from free to $3 to $30,000 in a month and a half. And so anything else that he touches, people are speculating on. Now, he's got a lot of these repos and code bases open that he's working on. And so when people get wind that he's working on something, some people want to invest. Now, a hacker's kind of got in there and then deployed this or launched this contract, kind of told people, hey, look at this, Andre's working on it, you should buy it. All these people, I think it was at $15 million. Anyway, that's kind of, who do you blame in this situation? A lot of people in the wrong, but I think the good news is that some of the devs, and these are the best devs out there that are involved in these kind of projects at the moment, are going to be partly compensating some people. And Andre's also said, you know what, I need to be more careful. So look, we're always learning. As long as we're allowed to make mistakes, as long as we learn from them. Dave Guetta, a lot of you will be familiar with him, big on the DJ scene in the 2000s when I was at uni. I know, maybe I'm too old now, but he has secured a deal with a VR platform. So this is Senso, smaller one I hadn't heard of, ERC20. Similar fashion in-game currencies like Fortnite and V-Bucks. Senso is used for all the transactions within the Sensorium Galaxy. So wow, maybe guys, we'll have to attend a bit of a meetup or see if we can get Dave Guetta playing in Decentralised. Is that the plan? Have they got their own world, or are they going to be having worlds within worlds? One that I do want to read up more on, because the whispers that I've heard, for those of you that want a little Easter egg, is that there are going to be a lot more concerts and music and live events in Decentraland going forward. So I think NFTs as music and that whole concept of being able to go out in public while everyone's in lockdown and attend these concerts virtually, I think it's $1 billion industry. Singularity Net, they are looking to head over to Cardano. So title a little bit misleading here. They said that they're seriously discussing it. But either way, I think it's great for competition. Look, I want to give you guys all the news. A lot of people, think that I'm an Ethereum maximalist, but honestly, guys, I'm just as passionate still about Bitcoin. I'm passionate about dozens of projects. I just think that these guys have the lead and the head start and the network effects at the moment. And that doesn't mean that there's going to not be other winners and huge winners. I love seeing stories like this. An Aussie dev that's helping bring Cardano to Shopify payments. That's so cool. So congratulations to, what was his name here? I did reach out to him before, so maybe I will get him on the channel. But look, it's positive. I'm going to support as many projects as I can. I did like the fact that eToro announced they're going to be offering staking for projects like Cardano, where people do find it hard to set up the wallets and whatnot. So look, Tron as well, I'm sure they'll branch out to all the different staking projects, maybe Ethereum. So that is going to be popular with a retail audience. And as always, guys, we've got that $100 promotion running down below if you are interested in using the eToro app. Now, one thing I do want to mention was this detailed write-up on The Verge. Now, they do, I guess you'd call them these sort of hit pieces from time to time, but this had a lot of detail in it about some of the stuff that Justin Sun gets into and up to, and the brave face, the nice face that he puts on. And you guys know that I had him on the channel, and I actually thought he came across reasonably friendly, but maybe I was fooled. But if you like a bit of controversy, make sure you have a read of that article from The Verge. Okie dokie. Couple more here. So big news items from competing protocols. I really like Polkadot. I think that they deserve to be in the top 10 a lot more than some other projects that are currently there. So I've signed up for this alpha launch of Refinance, which is cross-chain, bringing liquidity from centralized exchanges to all the DEXs as well. A lot of potential there. Cardano Swap, if I've pronounced that right. Multi-chain protocol as well on Polkadot. CeeLo is another one that I like. We saw OMM, Open Money Market, on Icon. So look, some brilliant stuff. That's the green shoots of all the protocols. I think one of my predictions at the start of the year was the old good projects will make a comeback, and we are definitely seeing that. Waves, one that I've never really read up a lot on. You don't see it a lot in the news, but I like this concept. DeFo, decentralized forex exchange. These are the most popular elected currencies by their community. And you have this liquidity, swap any coin for another, stake them, earn huge annual interest rates. This is competing in global forex markets, and it can integrate with other chains as well. So great stuff. Happy to see it. Definity, these guys have been building for 2 or 3 years. At the current valuation, they look to be launching it. I think it was a $8 billion market cap, which would put them in the top 5. They're really trying to build a decentralized cloud, or as they call it, the network nervous system. So this ties in heavily to that D-Web theme that I've been talking about. And when we see the developer report by our friends over at Sentiment here, it should be no surprise that we see these projects, Kasuma, Cosmos, Polkadot, Chainlink, Cardano, they are up here, top right, the ones that are doing the most developer activity, active GitHubs, and they're starting to produce those products. APY Finance is another one that's got 67 million deposited in the first hour. So look, some people are arguing that DeFi is a bubble that's popped. I think it is more the yield farming, all the vegetables and the scams and the crap that we have to weed out. There's been a lot of scams this week, and I see people talking about them, and I see people saying, oh, I got this for free, or it's just a little bit, what can it hurt? There's always someone on the other side of the screen, guys, and you're enabling the scammers by even partaking in it, okay? So just avoid it. There's so much opportunity out there in crypto. Don't support scams. Braintrust raises 18 million for DeFi of the gig economy. Another concept, gig economy, working from home, centralized web. I just love it. I think this is where a lot of money from VCs is going to flow. We've planted our chips in those areas as members with a lot of the research we've been doing for multiple years now. Things like Filecoin, decentralized file storage, and marketplace. I love the fact that they've come out with a DeFi bridge here as well as one of the first products that they want to launch. So Codify. It's just all coming together. I don't think we're in a bubble that's popped. I think we're going to see so many working products get rolled out in the next 12, 24 months. New Cipher is a node operator that's looking to encrypt the data that you're putting out before it broadcasts it to everyone. So we've got to solve those privacy issues still. Spark Pool, this is another one that's trying to, it's basically saying that there's this front-running problem. So a lot of the data that we see sits in the mempool, and the miners can sort of see that, or anyone can really read what's about to happen, and they can choose what they include in the next block, or they can choose to front run that. It's a little bit like those videos I've done about Wall Street with the high frequency trading and the front running of all that. We've got to make sure that those transactions can't be gamed. And we've already started to see it a little bit in the world of DEXs. A company knows that you're buying that token and you've put in a market buy, which means buy at any price. So they'll pinch all the liquidity and then they'll sell it back to you at a higher price and they make the spread. Ernst & Young have released another tool for analyzing Bitcoin transactions and on-chain data. The controversy that we've seen recently is MakerDAO and their court case, but they've added a range of the leading assets as collateral. It's disappointing. I'll just be honest, it is disappointing for me to see that USDC is the main asset now that is backing up a decentralized stablecoin. So I really hope that another project, Synthetics have got their SUSD. There's a lot of others out there now. I really hope that there's another coin that comes out that doesn't allow these centralized or semi-centralized coins to be collateral for something that's meant to be decentralized. Chainlink, it has been hit hard. I showed that chart last week about its 61.8% retracement. It's had a nice bounce since then. Strong projects are going to bounce hard. So Chainlink are now securing that $1 billion of wrapped Bitcoin with this proof of reserve concept and audit. Blockstack's Clarity smart contracts will source data from Chainlink. So they're still making moves. And a lot of these DeFi tokens have had this oversold, but if you look at these metrics, and I did a big write-up for members this week about these numbers, just look at the revenue that they're creating. Now compare that with something like BSV or Tron, or some of these things are in the top 10 or 20, even Litecoin that I like, but we've just got to be realistic about how many people are actually using it. What are the fees being paid? What are the revenue that's being produced by that chain? And we compare it to these protocols, and these things are orders of magnitude better. So you can argue, why aren't these coins in the top 10? And I think that we might see that in the next few months, and that's going to upset a lot of people. So positive metrics here from Chainlink, sentiment there. I'll let you pause that if you want to check it out. This is the set protocol index that they came out with that incorporates a lot of these leading projects. So just like I spoke about, money's going to flow to the best projects. That's going to happen in the decentralized sense as well. So as we have more and more people creating decentralized hedge funds, baskets, tokens, indexes, sets, all these things lead to buying of these tokens and putting upwards pressure on the price. So it sucks when we're in a bear market, but it also propels everything higher when we're in a bull market. Nexus Mutual launched shield farming, which is an incentive to increase the insurance on protocols that are happy to also pay a token as reward. So I absolutely love seeing that. You guys know we covered that one at $2. It was my favorite project at the start of the year, and it's up, I think, 40x. The MakerDAO lawsuit has gone to arbitration, so unfortunately we haven't heard the end of that. Now, this was a quote that got taken a little bit out of context. So Vitalik's talking about how a lot of these apps are unusable because of congestion and gas fees, but we know that that is exactly why we are aiming for these scaling solutions to be rolled out. So roll-ups, pardon the pun, is the big focus at the moment because of how good it is. It has huge scaling and privacy, but we've also got things like scale. I've been talking about XDAI all week. Loopring Pay, ZK Technologies. I did my Gitcoin donations this week using that ZK technology of theirs as well. So I think I donated to 50 or maybe even 80 projects in the end, and it cost a couple of dollars. So the technologies are there. Seller, fantastic protocol. I also like what they're doing. They've got a few little games as well. So many options that we're seeing that are scaling Ethereum. These are the moon tokens that you get on Reddit. And if you watched our tutorial the other night, guys, you should be able to work out how you can turn these tokens that you get for free on Reddit into real money. So you got to convert them on the side chain, convert them into XDAI, convert that XDAI into DAI, and then you can sell your DAI and you can turn these fun tokens that people are getting by the thousands on Reddit, or if you're a gamer on Fortnite, you should be getting these bricks tokens. Turn those into real money. And you know what I love about this? It's the fact that the people that have taken the time to learn how to do this are the ones that have made a lot of money for free. Ethereum 2.0, look, it was 90% successful. We didn't have a lot of nodes online, a lot of one client. I'm not going to go into the technical issues there, but there's still a lot of talk that's going to go live any day now. The blockchain is big. It's already reached 75 gigabytes. Look, is that really huge these days with technology, guys? It's not hard to buy a terabyte, multi-terabyte hard drive for $100, a couple $100 these days to run an Ethereum full node, and that's only going to get smaller and lighter. And as always, the smartest minds are working on solving these problems. One piece of, interesting news that I want you to understand is another theory I put forward a little while ago about how Barry Silbert and Grayscale have got a huge interest in their investment in Ethereum Classic, and they're going to create a narrative about why Ethereum is bad or uncertain, or Ethereum Classic is a safe option, or at least hedge into that. And this is almost exactly what I predicted this week. We see Grayscale come out and file with the SEC saying, there's a material risk here. There's a lot of uncertainty around ETH2 and that transition. And I think they want to start that conversation and get people talking about Ethereum Classic as an alternative because they've basically got heavy bags that they need to pump, to put it bluntly. Okay, so in terms of staking, if you can't do that yourself, remember Rocket Pool are now starting to get a lot of mainstream coverage. We'll do tutorials for you on that. If you can't get the 32 ETH and do it yourself, you can contribute to a pool. Look, we might put together some Nuggets News or NCC community pools. There's going to be so many ways to do that. But I wanted to give you a little bit of a sneak peek of a member post here because, once again, sentiment towards Ethereum and DeFi is really tanked. Doesn't mean it can't go lower and have a capitulation. But I really think when you look at all those news items that I've been talking about tonight or for the past many years, if you're in world news before Nuggets News, I think we've been talking about Ethereum for 5 years now, but the time you want to be buying is when sentiment is down, not 2 weeks ago when all the YouTubers were making these top 10 DeFi picks and now all the DeFi coins have crashed 60 or 70 or 80%, okay? You want to be in front of the herd and doing the right thing. And obviously that's where we use our fundamentals with all this on-chain data as well as our technical analysis to try and paint the best picture. Now, I love this metric here. This is the supply that was last active over 5 years ago. So steadily increasing, just grinding higher here. We're now up to 22% of coins of the circulating supply of Bitcoin that hasn't moved in 5 years. Strong hands. It's not like previous dips where we're seeing these coins, people selling off, people get nervous. I really think that there's strong hodlers that are clearly here at the moment. Look, people are writing off Plan B stock to flow model. I actually am a fan of it. I just wish that he'd take into consideration Ethereum more, because if you're going to compare gold and to silver, or silver to gold, I should say, you're going to compare real estate and diamonds, you can compare Ethereum to Bitcoin as well. And then once it introduces EIP 1559, it becomes deflationary, it becomes more scarce. Now, There's a million things that give something value. It's not just its scarcity that creates a store of wealth, but I think we need to start adding this into the conversation, or I think it's going to force its way into the conversation. So don't wait for that to happen, because it'll already be priced in by the time the media and everyone are talking about it. A quick look at the charts. We're just going to have a look at the weekly here on Bitcoin. On Ethereum to start with, I think we've had a nice pullback now after that huge run up, and we knew we needed to cool off in terms of letting the RSI reset on the daily and the weekly, and we've done that now. Look over at Bitcoin, it's come back. It has touched these big support levels. Keep it simple, I think I posted the other day on Twitter. Just look at these weekly support levels. Support becomes resistance. Weekly close, weekly open, time and time again here. And when we get a nice weak touch, and then we get a nice candle body here. Is this a little bit closer? Sorry, I got it on log. What I'm basically saying here, guys, is that I think that this is all really healthy action for now. Where I want to leave you is that final thought that if stock markets, if something happens to Trump's condition for whatever reason, if stock markets roll over and have a nasty, nasty leg down, and at the moment, this is not a pretty chart, but I think we will get a relief rally once we have certainty about the election, or once we get that big stimulus pass. So even if it doesn't get passed and the election, the results and whatever take us weeks and weeks and weeks, even in that scenario, we could grind down lower here. That doesn't matter. I can be patient. We've gone a couple of years where Bitcoin's gone lower all year and bottomed around that December period, and then we start the bull market at the start of next year. So we've got to be patient. I've been patient for 8 years. I know everyone wants to get rich overnight, but trust me, I think we're still on target for that next super cycle. I think Bitcoin is going to $100,000 within 5 years. I think Ethereum is going well past $1,000 in the next market cycle. And I think all the best projects are going to continue to capture money from the traditional world where there's too much money and not enough quality to invest into. So guys, I know that's a long one. I hope you've enjoyed it. Smash that like button. Head over to nuggetsnews.com.au if you haven't already. Share this with friends and family, and I'll talk to you again soon. Cheers.